Hi, this is Lara at Elliott Wave Gold with your daily analysis for Wednesday, 9th of July. I'm recording the video today, 7:25 p.m. Eastern Standard Time. I was expecting downwards and sideways movement to complete this minor degree B wave. That's not what we got, and upwards movement invalidated all four of my hourly wave counts. That illustrates the difficulty with B waves. I'll explain why when we get to the first hourly chart, but I do not think minor wave B is over. This structure just is incomplete, and it doesn't work to see upwards movement as the start of a new impulse for minor C. So I'm expecting more sideways movement still for another 1 to 1.5 days most likely before this correction is complete. When it breaks out, it should break out upwards. But we're not there yet still. At the daily chart level, the wave count remains the same for the main wave count, which has a much higher probability than the alternate. The main wave count sees primary wave 4 huge regular contracting triangle as incomplete. It's in the final zigzag of intermediate wave E. Within this zigzag, we have a 5-wave impulse for minor A over here. We need a 3-wave corrective structure for minor B to complete. I expect now, if we don't see any more upwards movement, that we're not going to see much more downwards movement. It's probably going to end in another 1 to 1.5 days as a regular flat correction, so not too much downwards movement, more sideways movement. Minor B can't move beyond the start of A below 1240.61, but if it were to get down that low, it should find extremely strong support at the BD trend line. It shouldn't break below this black line. At this stage, though, I expect it's going to be very, very shallow and somewhat time-consuming. When I know where minor wave B has ended, I will then calculate a target upwards for minor C to end using the ratio between A and C. I can't do that yet for you. All I can say at this stage about intermediate wave E is it's extremely likely to fall well short of this AC trend line. The other option for it, less likely, is it could overshoot this black trend line, and if it does that, it's likely to find resistance and end when price comes to touch the upper edge of the big maroon channel I'm copying over here from the weekly chart. Intermediate wave E may not move beyond the end of C above 1392.30. Let's have a look at the first of 3 charts, looking at the possible structures for minor B where it begins here. This point here. Most of this chart is seen in the same way as yesterday's charts, but the key difference and the reason for the invalidation is I missed the expanded flat correction in here. When I see this as a 3, 3, 5, the subdivisions have a much better fit, and that explains why we got movement above this point. At this stage, I expect that minor wave B is actually most likely to be unfolding as a regular flat correction. Minute wave A subdivides as a 3-wave zigzag. Minute wave B is now a completed double zigzag, which is termed a 3, and the second zigzag in the double has moved price substantially beyond the end of the first, so this double zigzag structure for minute wave B achieves the purpose of a double zigzag, has a slope against the trend 1 degree higher. It looks typical. Minute wave B here is a 95% correction of minute wave A, so the flat would be termed a regular flat. Regular flats normally have C waves which reach equality in length with their A waves. For this one, that gives us a target at 1307.51. It would be extremely likely for minute wave C to move at least slightly beyond the end of minute wave A to avoid a truncation. I have drawn this best fit channel around minuet wave C from this high to the last high, and it almost perfectly touches here the 3rd wave. I've placed a parallel copy down low to contain all of this upwards wave. When we see a nice clear breach of this trend channel with a full hourly candlestick below it and not touching the lower trend line, I would have some confidence that minuet wave C is over, this wave is over, and the next wave would then be underway. We would have price confirmation below 1321.69. At that price point, I would have a lot of confidence that minute wave B is over and the next wave down is underway. Within minute wave C, no second wave correction may move beyond the start of its first wave above 1332.49. The next wave count sees all the subdivisions absolutely identical right up to this point here, and then it's possible that minor B could be a sideways moving regular contracting or barrier triangle. With a zigzag for A, a double zigzag for B, we'd expect a zigzag down for C, which can't move beyond the end of A below 1308.63, and then another zigzag for D, which can't move beyond the end of B, or at least not much, above 1332.49. This invalidation point is not black and white, the lower one is though, and then another zigzag down for the final E wave. This wave count's pretty much the same as the first. It expects sideways movement in an ever-decreasing range rather than a 5-wave movement down. It still expects minor wave B as incomplete, should continue in a range-bound move for another, this one, possibly about 3 or more days. Of all the charts at the hourly level, this one allows for a more time-consuming B wave. Triangles take up time and move price sideways. Their purpose is to test our patience. Alternatively, this wave count is absolutely identical to the first chart right up to this point here, and then I've just moved the degree of labelling within the fifth wave down 1 degree. What if this is just the first and second wave, and the fifth wave is going to move higher? I'm doing this and looking at this possibility because the most common type of flat is actually an expanded flat, and that requires the B wave to be 105% the length of the A wave. So the B wave can move beyond the start of the A wave. I want to make it very clear that a new high above 1333.61 would not be confirmation that minor B is over. It could be a false breakout. It could be just an extension of minute B within a bigger expanded flat. The most common length of a B wave within a flat correction is between 100% to 138% the length of the A wave. So that gives us a target range between 1333.61 and 1343.10 if we see more upwards movement. Within microwave 5, if we see more downward movement, the second wave can't move beyond the end of the start of the first wave below 1321.69, and that's why movement below that price point would give me a lot of confidence that upwards movement was over for here now, and the next wave is underway. While price remains above 1321.69 and particularly within this small best fit channel, we must accept the possibility of new highs above 1333.61. We could be seeing a very common expanded flat unfolding. At the daily chart level, it's still just possible that primary 4 was over here, but this sideways and upwards movement just does not fit as the start of a new impulse. Any movement above 1333.61 would firmly and finally invalidate this alternate. Let's look at it on the hourly chart. If we see primary 4 over at that high, then the first wave down in primary 5 has a substantially truncated fifth wave. It is this truncation of minuet wave 5 which significantly reduces the probability of this wave count. And here we could have a very deep second wave correction. If this is the case, we'd be expecting a really strong increase in downward momentum, and minute 3 would reach 2.618, the length of minute 1 at 1275. But as I said, the truncation here substantially reduces the probability of this wave count, but it is technically possible. I just want to go back to the first hourly chart and just quickly explain to you why I'm so confident today that minor wave B is not over. If we tried to label minor wave B over here, that would fit. It would be a remarkably brief minor degree correction though, and the other problem with that now is from this low on up we would have to see the start of a minor degree C wave. Its first wave may only subdivide as a 5-wave structure. There are only 2 possibilities there, either an impulse or leading diagonal. Here's a zigzag, so we'd have to be seeing a leading diagonal unfolding upwards. This would be 1, 2 would end here, 3 would end here, 4 would end here, and 5 would have to end here. The problem with that is what would be the third wave of such a possibility is substantially the shortest, violating a very core Elliott wave rule. Such a wave count would be invalid. So minor b can't be over here. What if it was over here? It would have to be labelled as a double zigzag. First zigzag, X, second zigzag, but the second zigzag does not move beyond the end of the first as it should. It substantially failed to move beyond the end of the first. Double zigzags have the purpose of the second zigzag deepening the correction when the first one doesn't move price deep enough. So the second zigzag should move substantially beyond the end of the first. This would fit the subdivisions, but the purpose would not be achieved. The wave count would look quite ridiculous. I wouldn't want to publish such an idea. I've tried to see what if minor wave B could be over at this low right here, and I can see no corrective structure where the subdivisions all fit. It just doesn't make sense. So I've come to the conclusion that minor wave B must be incomplete. We're going to see more sideways and possibly downward movement before it's done for at least another 1.5 days. And that's all from me today with your gold analysis, and I hope that all our members are having a fabulous day.